Welcome, guys, to another episode of the WealthWise Show. I'm your host, the Wise Investor, and today we're going to be embarking on hopefully a WealthWise journey for you. And I want to talk about this past week. So, as you guys know, this year is going to be a little bit different. I'm going to be doing more videos like this one. If you're listening to this on Spotify, Apple Music, or wherever you're listening to this podcast, I have a video feature on YouTube. You can follow us at the WealthWise Show on YouTube. And you can follow our Instagram as well for any updates, even though I haven't really been updated it. So today I wanted to talk about, well, let me get some housekeeping out of the way first. I'm pretty sure this is in the intro, but just to be on the safe side, this podcast, myself, in this episode is not to be used as financial advice, personalized financial advice. This is educational purposes only, and all these opinions that I have are just that, my opinions. They don't reflect the opinions of Simplicity Wealth. They don't affect the opinions, or they're not the opinions of any of my clients, and so forth. So understand, guys, my opinion only, and you know, educational purposes only for all the episodes, every episode I've ever done. With that being said, let's talk about core CPI. So I know Monday, you guys are getting 2 episodes this week. So yeah, that is, it's really nice. Because Friday of last week, I forgot to upload an episode. And that's because I had some really high quality episodes that I was going to render and put out. But I'm pretty sure you guys heard, if you listen to this podcast, that, I couldn't do it with my computer. My Adobe Premiere just would not export it. So I got to figure that out this year, because I would like to give you guys some high quality sound, which I'm currently not doing, and some high quality video, which I'm currently not doing at this moment. But I'm brand new, so bear with me. But back to CPI. So the last episode, I talked about how um, you know, the CPI. I felt like CPI was going to come in a little higher than expected, or I wouldn't say I came in higher than expected. I would say it came in higher than expected, or stayed the same. Basically, there wouldn't be much of a change. That's pretty much what I was figuring, because we just came out of the holiday seasons. Between Halloween, Thanksgiving, Christmas, and New Year's. Those are a lot of holidays that require a lot of spending, and not just spending on the consumer part, but just spending on retailers hiring people, companies preparing to hire people and make more money so they can keep up with demand. And when you have an influx of people who are participating in the job market, like we did, because we looked at this past or last week's job numbers that came in off on payroll, it was higher. And of course that makes sense, because holiday season. I live in Florida, where Disney is one of or it probably is the biggest employer in the state of Florida. And I know seasonality. I've been living in Florida my entire life. And, I know during the summertime, a lot of my friends and family members, when I was younger, they'll all go get seasonal jobs at Disney. Then during Christmas time, they'll go get seasonal jobs at Disney. So I understand that depending on the season, it can have an impact on the job numbers. But does that mean that, those numbers are here to stay? Does that mean that, this is just not a temporary influx or inflation, or whatever the word is I'm looking for? So that's pretty much where I come in and start using, my noodle, you know, this thing up here. And I start, critically thinking. I know that looking at the broader economy, looking at the broader you know, reports and things like that, inflation was trending down all last year. Why is that? Well, the Fed's doing their job. And so if I know that if inflation was trending all last year and we hit a period of spending, one of the biggest periods ever, seasonality wise, when it comes down to spending, that makes sense that the number will come in a little bit higher. So it did just that. Um, if I am looking at the core CPI numbers that came out Thursday, I looked at the video on Monday and I kept saying Friday. Um, and that's because, let me pause. Sorry about that. My Wi-Fi alarm went off again. But I forget what I was saying. For you, it's if like microseconds. For me, it was a few seconds, and I forget pretty quickly. But the point is, um, CPI came in a little bit higher, um, and I say a little bit, and that's what I was figuring. Um, and not, I'm not saying that I'm some sort of guru. I'm not saying, hey, I can tell the future, or I'm not saying that you should listen to what I'm saying as and take it as fact. No, this is just how I process things. And the point of this show is to help you guys be able to process things and figure out how to process things on your own. So, sorry, hit my mic. So it did come in a tad bit higher. It came in for the month over month, 10 basis points higher. When I say 10 basis points, because I'm going to start, like I told you before, I'm going to start trying to use terminology that I'm used to. 10 basis points is 0.19 or 0.10%. You see how I started to glitch when I started to try to figure out numbers? So that's why it's easier for me to say certain things. But the point is, it came in 10 basis points higher, which is, not terrible. It's not something where it's a huge jump. Now, if it came in at, 20, 30 basis point higher, then that would be cause for concern. But just 10 basis points higher is, makes sense. And then for the year over year, it came in 30 basis points higher. And so I'm not really looking at year over year, like I said before, mainly because, you know, that's a year worth of data that, you know, on the grand scheme of things, is too far for me. So I like the month over month where it's pretty close to this month. So whatever's happening this month, I'm going to find out next month when it comes down to the CPI numbers. And unemployment claims came in low too, which makes sense. Um, and the unemployment claims is basically, for those who apply for unemployment assistance when they, leave their jobs or get laid off or something like that. And these numbers come in weekly. So every week we get an updated number. And I think this was the lowest number in quite a while. And so that is good because, I look at it as at least people were able to, spend time with their family last season, be able to, put food on the table, provide for their families. And the inflation was not crazy. I know a lot of people are talking about it because it's a good talking point. Even I'm talking about it, and I'm a nobody. And so it's one of those things where it can be salacialized. I think that's a big word for me. It could be salacialized, I guess, where you're looking at these numbers and people want to have a news story. But in the grand scheme of things, as of currently right now, for me, I'm not alarmed. Like I said, if next month's CPI number comes in and it stays the same or it goes higher, then that will be like, okay, let me wait, maybe one more report before I be like, okay, maybe we should start looking at something. Now I can start changing plans. And that brings me to my next point of it takes time. When we are at least in this line of work I'm in, um, we don't make decisions off of one report, one day, 1 hour. When something comes out, it takes time. We have to digest it. We have to see other things because when you're dealing with, you know, other people's finances, making rash decisions can be catastrophic for your client. And so, in the case where I'm trying to relate it to the listener, the viewer, if you're making rash decisions off of one particular report, if you are doing your own investing, if you are doing your own trading or whatever, what have you, then you're going to be bounced around. I know a lot of people who are do it themselves first, and they do it themselves, and they're like, I can't figure it out because 1 minute is this, next minute is that, and that's what we call noise. And so, understanding that if you're going to be in this industry, because clearly you're listening to a financial podcast, and not doing something else, then it takes time. And it doesn't take a little bit of time. It doesn't take a day. It doesn't take a week. It doesn't take a month. I would say it'll probably take a quarter for me to make a decision on something. And that's to me still short term. So when it comes down to these reports, instead of looking at the news or looking at certain other media um, platforms that tell you these numbers, because they're going to tell you these numbers, like even my platform, they're going to tell you these numbers and they're still going to add their opinion on it. To me, that's noise. So what I like to do is, if I know that I'm waiting on a report, I'm not going to listen to anything, not even myself. I'm not going to listen to no podcast. I'm not going to listen to no news outlets. I'm not going to listen to no radio shows. And I'm just going to wait for the report to come out. And then I'm going to take time out of my day to read the report. And then I'm going to take time out to read the previous report and maybe 2 or 3 reports ago. Take time out to digest it, understand what these numbers mean, and then I wait. Just simply as that, I wait. Now, if you're trading, that's completely different because I do trade as well. Trading can be a little different. When you are a trader, someone who buy and sell for a living in quick succession, you know, yes, these news reports cause you to react quickly. But once again, I do the same thing. If I know that I'm going to be trading a certain day and, or a certain week, and I know a report is coming out, I'm probably going to wait until that report comes out. Once again, digest it. And the digestion might be a little quicker. I might look at a report at 8:30 and don't trade until 9:30, and for day trading or trading in general, that could be a long time because people want to catch the move really quickly. They want to get in on it, but being able to be patient with myself and with the market allow me to make informed decisions. And that's the whole point of this show. The whole point of me being here, the whole point of you listening, is trying to help you make better informed decisions on your finances. That's either if you're retiring or planning for retirement, making sure, hey, I'm not just listening to something I heard on YouTube or something I heard on the radio. Let me go open up this account and do X, Y, and Z. And next thing you know, that wasn't beneficial for your plan. And so being patient, digesting the information that you're taking, and then doing your own research, that then you can make a rash decision. And so the moral of the story is be patient. CPI came in a little hotter, but let's see what next month looks like. And then if next month stays the same, let's say next month it comes in at 30 basis points again. All right. Well, it didn't go up. It didn't go down, but it didn't go up. So let's wait until the following month. Now, if it stays the same again, now it's getting like we're getting a little stagnant. And that brings me to next week's episode. Not really. I just made that up. I'm sorry. I shouldn't do that. Stagflation is a thing, but I'll talk about that at some point in time. Actually, I might do that. I'm planning an episode as you see before your eyes. Might do about inflation, stagflation, deflation, and there's some other stuff too that is important for you guys to understand. So I don't know the time on this because I know last Monday I had like my name and the counter and all that stuff. Even though I'm 30, I feel like I am 85 years old because I am not good with this technology stuff. It's moving too fast. But that's pretty much it, guys. Be more of the story. Put a button on this before I go is to be patient. Be patient with yourself. Be patient with others, and be patient with time. You know, I know a lot of time they feel like we don't have a lot of time, but if you really break it down, you have enough time to do the things you need to do. And feeling rushed can make you, do rash things and make rash decisions. That's just going to make things worse. And now that rash decision has to be rectified. And now you are, I don't want to say wasting, but now you're allotting more time to correct that rash decision. So that's going to be it for this one. Episode 2. I'm not sure about how long I'm going to keep doing episodes day of or episodes where it's the same week because it's taking time out of my day. Like it's 9:56 a.m. on the 12th, which is Friday. I have no appointments until later, so that's why I had some time. And I already did my trading. I did my trading pre-market at 8:30. So I had some time. So sometimes if I have the time, I may do it. Other times you might just get a pre-recorded video, which is technically all videos are pre-recorded, but so that's gonna be it. I appreciate you guys' time and I appreciate you listening. And until next time, stay wealthwise.